Hey everyone, Levi here, and in this video, I thought I'd go over some of the biggest tax changes happening in Canada for 2025, and I thought this would be a good time to make it, as I'm sure most people are starting to file their taxes. So I just made a list of 8 or 9 of the biggest changes, and how they'll impact each of us. So I thought I'd go through, and if any of these are applicable, hopefully you're able to optimize your own filing to make the most of it. So yeah, let's just go down the list and get started. The first one is TFSA contribution limit increase. It's increased to $7,000 in 2025, which gives more room for everyone to invest tax-free. For people born in 1991 or earlier, their total lifetime rooms $102,000. So lots of room for all of those people to start investing. And anyone, even new Canadians, as long as they're over 18 and a valid SIN, can start contributing, as contribution rooms started right when they first arrived, even if you haven't already made an account. So yeah, that's what's going on with TFSAs. Next thing is the RSP contribution limit. The contribution room grows by 18% of earned income from last year or the previous year, which is capped at $32,400 in 2025. So this is most applicable to people, earning quite a bit of money, over $180,000 who'll benefit the most from this increase. Obviously, if you're below that, then the raise doesn't really do too much to you. So for those making, in the highest tax brackets, they will have a little bit more room this year, which is ideal for them. Next thing is some changes to the home buyer plan, specifically an enhancement with it. The biggest thing with this, if you're not familiar, is it allows you to take money out of your RSP for a down payment. And that amount was capped at $35,000 per person, and that's been raised to 60, so almost double for an individual, or 120 for a couple. So that's a big advantage. If you've been saving money in your RSP and you're planning to buy a house, you can take money out of that tax-free to put down on a house. As well, the repayment grace period has been extended as well, so giving all those home buyers a little bit more flexibility. So definitely some positive changes for those in that situation. Next is the FHSA. This has obviously been talked about in quite a bit. Not too many drastic changes with it this year, but rather just the fact that it's still here. The annual limit is still 8,000, lifetime limit of 40,000, and then unused room from last year is carried forward to this year. So if you open an account last year, you'd have a lifetime room of 16,000. Then if you open it right when it started, you'd be at $24,000. So more just a reminder to make sure that you make one if you haven't already and are contributing if you want. The CPP contribution increased as well. Rather, the contribution room limit increased, which mostly impacts people making above $68,000, and contributions for those people will rise with a maximum of $443 contribution. Self-employed individuals obviously still have to pay both the employee and the employer portion, resulting in a higher contribution if you are self-employed, either in a sole proprietorship or take a salary from your corporation. Probably the biggest change for everyone is the tax bracket expansions. All tax brackets expanded by 2.7% to account for inflation, which means more of your income or slightly more of your income will fall into those lower brackets. As well, the basic personal amount increased by a few $100s to about $16,000, which helps everyone, but especially those with lower incomes reduce their tax bill. Next kind of ongoing swirling change is the capital gains tax change. Obviously, last year, the inclusion rate rose from 55 to about 2/3 for wealthier Canadians and corporations, specifically those who earn over 250K capital gains in a single year personally or any within their corporation. This seems to have not really, it seems to have kind of stalled. So currently they're still collecting it, but there's a lot of sentiment that might get reversed, but currently that is still, an ongoing change. And obviously this doesn't apply to homeowners selling their primary residence. But for example, if you're selling a rental or a cottage with large capital gain, then that would be applicable. A really big change, which doesn't apply to many people, but those it does is quite significant, is the increase in the LCGE, lifetime capital gain exemption. Those who own a business or own shares in any Canadian controlled private corporation, CCPC, will benefit from an increased lifetime gain exemption, which is now $1.25 million per person, up from about $1 million last year. So any business owner or person who owns private or shares in a private company can sell. They have that significant exemption on that. It's not a one-shot use. You can whittle it down so if you sell some shares. So that's a quite significant increase for those that's applicable. So anyways, yeah, those are the changes. End of the day, biggest thing, taxes on income are going down a little bit due to expansion, but CPP will go up, especially for those making more. Yeah, so anyways, hopefully you find that useful for anyone who is filing and kind of wondering what the biggest changes are this year. If you did, make sure you like, comment, and subscribe, and stick around for more business and finance related videos.